Hello, Thursday. And I'll just get on with this and you'll catch up with it. Shadow banking. System larger than at the start of the financial crisis. This is from Barry Ritholtz's blog, but it's Washington's blog that's writing it. One of the main indicators of financial danger has increased. The failure to regulate the shadow banking system was one of the causes of the financial crisis. Yes. As we noted in 2009, the Bank for International Settlements, often described as the central bank for central banks, slammed the Federal Reserve for failing to rein in the shadow banking system. That's back in 2009. How could such a huge shadow banking system emerge without provoking clear statements of official concern? Years later, the Fed and other regulators have allowed the shadow banking system to grow even bigger. As Reuters notes today, the system of so-called shadow banking, blamed by some for aggravating the global financial crisis, grew to a new high of $67 trillion globally last year, a top regulator, somebody said. Let's move on. Confirming this, Bloomberg, shadow banking grows to a $67 trillion industry, regulators say. The size of the shadow banking system, which includes the activities of money market funds, monoline insurers, and off-balance sheet investment vehicles, can create systemic risks and amplify market reactions when market liquidity is scarce, etc. Financial Times, FSB seeks to tame shadow banking. Non-bank lending markets face unprecedented levels of government intervention under sweeping new proposals to tame shadow banking laid out by global regulators meeting as the Financial Stability Board. The Basel-based regulatory group made clear on Sunday that it intends to push for tighter oversight of any part of the $67 trillion sector that takes on bank-like attributes, such as using short-term assets to fund longer-term lending, known as maturity transformation. Borrowing short, lending long. Borrow short, lend long. That's banking. They also intend to set global capital and liquidity standards for non-banks that could be subject to investor panics akin to depositor runs, which is what happened in 2007. If it looks like a bank and quacks like a bank, it's got to be subject to bank-like safeguards, Lord Turner, the UK regulator, who helped lead the project, told the Financial Times. Another FT article. First, banking reform, usually complicated by a backlash against bankers after the crisis, which confuses banks with bankers. This is why I've picked this out. We've got to get whoosh out of our heads this hate for bankers and understand the difference between bankers and banks. First, banking reform is usually complicated by the backlash against bankers after a crisis, which confuses banks with bankers. In financial crises, the government and society act to save a banking system that is about to crash and burn. As Ben Bernanke, Federal Reserve Chairman, noted in his testimony before the U.S. Financial Crisis Inquiry Commission, 12 of the 13 largest United States financial institutions were on the verge of insolvency in 2008. Normally, most of it caused by their off-balance sheet vehicles, shadow banking, which was revealed in 2007. That is why such crises are systemic. Historically, during banking crisis, banks have suspended convertibility, have been bailed out, nationalised, subsidised, covered by blanket deposit guarantees and so on. There is no case where a society intentionally liquidated its banking during a financial crisis. But here's the rub. Saving the banking system means saving the bankers. And that means that debate over reform is overtaken by anger at bankers. Bankers push back, regulators act tough, and politicians make noises. In the cacophony of reform, if it happens at all, risks pushing banking into new shadows in the future. So you've got the whole picture now. In the confusion, they're screwing on the banks. They're actually not. The Basel reforms are actually being pushed out into the future, and national reforms are being pushed out into the future on the banks. But the banks are still reacting by going, well, if you're going to squeeze us here, bar of soap, squidge out into the shadow banking system. So the authorities are trying to follow them. But, well, let's get it from this one. Another Financial Times article. I know you can't link to many of these unless you pay your subscription. €300. Those who deride the FPC Financial Policy Committee as unelected extremists, that would be the bankers, say even the government was nervous about the tough line the regulator was taking on the banks and the potential constraints to banks' lending capacity stemming from an unfettered focus on financial stability and higher capital requirements. In June, the committee's role was tweaked by the government to force it to bear economic growth. You can tell that's a government thing because that's a nonsense sort of comment. You can bear economic growth in mind as well while you're at it, please, regulators. As a result, the committee's new, more nuanced role, banks feel they received a mixed message from the FPC, of course they would now. Alongside the exhortations to raise capital, the committee talked too about some banks having potential excesses of capital which could support additional lending to the real economy. And there's the rub. Screw them on capital and they can't lend. It's not won't lend, they can't lend. It's not rational for them to lend. So what do you do? Screw them too much, it goes into the shadow banking. Follow them into shadow banking, and they're so constrained they don't do lending. The government tears its hair out because it's not getting growth in the economy to pay off bills. So the government screws down on the regulators who release then the bankers. It's terrifically difficult. And you've got to find enough sensible people to do it right, which is impossible. And it was a bit heavy, that, but I felt it had to go through. That's what's happening in the banking system. It's a real, everyone's chasing round after each other. Woof, 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 meow, 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 squeak, squeak, squeak. Something like that. Bye.